If you're new to my channel, then I would like to introduce myself. I'm Shrinidhi and I post short lecture videos on accounting and finance every week. And I also take up suggestions from my subscribers. So you could consider subscribing to my channel and leave a comment on the topic that you're looking forward so that I could come up with the topic in my next video.
So in my channels, you would have already been looking into various topics about finance and basics of accounting. So today, I'm going to discuss about the journey of a financial transaction from journal to trial balance. That is, financial transaction takes place, how it traverses through the books of accounts, that is, how it gets journalized, and then how it goes to a ledger, then finally how it reaches and where does it get placed in a trial balance. First, I will briefly do these three uh, first, I will brief you about what is journal, ledger, and a trial balance, and then we will look into a detailed problem being solved uh, step by step from for a transaction for 5 financial transactions. And in a separate video, I'll come up with how a transaction is being journalized and how it passes to the ledger and then a trial balance. The topic which we are going to discuss today is relevant for Class 11 CBSE accounting as well as CACPT Paper 1 accounting. So since it's common for both the uh, areas, that is for Class 11 as well as it's being covered in the CA foundation, I have chosen these three areas together and have explained in this video. Now let's move on to the topic. Before we move further into the topic, I would like to give a brief recap on the basic and main concepts which we need to just recollect once before we proceed further. So one is whenever we talk about the financial transaction and entering it into the books of accounts, it is very, very critical that we are following a double entry system of bookkeeping. So the dual concept is something which we need to keep in mind. That is the concept of a debit and a credit. So every transaction will have a debit and a credit. So there are two parts for transaction. Money measurement is also equally important because only those transactions which are financially quantifiable get sent to the books of accounts. And finally, it is the accrual concept which is being accepted by the general globally accepted accounting policies as well. So it is the accrual concept which we will be using in journalizing and in preparation of the financial statements. Now that we have just recapped the three main concepts or the financial or the accounting principles which are key for bookkeeping and the financial preparation of the financial statements. Now we are going to just see what are all the things which we will be learning as part of journalizing. What is actually journalizing of a transaction? It is nothing but recording of a transaction. So whenever an event takes place, and it is once it is financial in nature, that is, it can be quantifiable in terms of money. There is a money measurement concept we have just checked now, right? So if an event happens in a business which is quantifiable in terms of money and it has occurred in a particular specific time, then and two parties are involved. So once all these four conditions are being satisfied, immediately there is a need to record that particular transaction in the form of a journal. So journal is the first step in the process of accounting. Once a transaction is being journalized, next what does it happen is we need to post them to the ledgers. What is a ledger? What happens while we prepare ledgers? In a ledger, what we do is we classify the transactions based on the category of the transaction which has happened. For example, there would be various journals, various transactions would have been taken place. For example, there would be a purchase, there will be a sale, then there will be again a payment for some expense, then again there will be another purchase, then some debtor would have settled their debt balance, so we would have received from the debtor. So there will be various transactions, and All these transactions will go through the first step of journal. If if we stayed there in the form of a journal alone, then we won't be able to get a complete picture on what has happened in terms of finance. So what we do the next is we categorize these transactions, we classify them into major categories, which we call it as ledgers. Ledgers are nothing but head of account. For example, all transactions pertaining to purchases would be booked in a purchases ledger. All transactions pertaining to sale will be posted in a sales ledger. All transactions pertaining to a specific kind of an expense, a rent, would be booked in a ledger. And whatever pertaining to debtors would be booked, posted into a debtors ledger. Similarly, the ledgers are being created for each category of transactions. So this classification is very important in order to get an idea of what the transactions have taken place, how for each category, what is the quantum of expense or income or asset or liability created. I have posted a separate short video on why preparing ledgers are very important. You can watch this. I have linked it in the description. We will just see why we need to classify in detail now. So we know that uh, we already know that there are three types of accounts, right? One is a personal account, real account, and nominal account. These are the three types of accounts. So under personal accounts, we have debtors, shareholders. In real account, we have cash, fixed assets, stock in trade. In an office account, we have expense and an income. So these are the categories of accounts which I had already mentioned. So we follow these golden rules of accounting and post the journals. But we don't um, if the financial transaction doesn't evolve from a journal to a ledger, then it will lose its value. So we prepare the ledgers and post them into the ledgers. Once the journals are being posted into the ledger, finally comes the trial balance. What is a trial balance? It is a summary of a ledger, as you would have seen many trial balance like that. How a trial balance looks, it will have various accounts like share capital and reserves and surplus. Then there will be a debtor balance. There will be a creditor balance. There will be some expenses. Then there will be purchases if it is a manufacturing concern. Purchases. There will be sales. There will be stock in trade and many other expenses like salaries, rent, and so on. So, trial balance is nothing but a summary of all the ledgers which were being uh, created so far in the books of accounts, and each ledger will be of a particular nature. For example, if it is a share capital, so for each of the ledgers, the balances will be given. Say for share capital would be a credit balance account and it will have some credit balance, debtors will have a debit balance, again creditors some credit balance. Expenses are in nature of debit balances because debit all expenses and losses, right? So purchases, once again, debit balance, sales, once again a credit balance, so on and so forth. This is how a trial balance looks. So it will have, and finally there will be a total. So a trial balance is nothing but a summary of all these ledgers which have been opened till date in the books of accounts. So that is nothing but the trial balance. It is actually forms the base for the financial statement. So financial statement, it is Trial balance is actually the base for preparation of the financial statement. When I say financial statement, it means the profit and loss account, balance sheet, and notes to account. So it is only the trial balance based on which the financial statements of trading profit and loss account, balance sheet, and notes to accounts are being prepared. And trial balance gives an arithmetic accuracy. It gives a sign whether it is arithmetically, whether the books of accounts are being uh, correctly maintained. How do we get to know? The debit totals and the credit totals need to be equal, which signifies only the arithmetic accuracy. And it doesn't mean that the compliance to accounting principles or standards or policies are being accurate. So that is where it is the role of a chartered accountant to look whether the accounting principles, standards, and policies are being correctly applied. It is the role of an auditor to check about the compliance of the accounting standards and principles of that particular entity while preparation and the presentation of the financial statement. So trial balance gives only about it only gives a signature on the arithmetic accuracy and not of the compliance with the accounting standards. So let us have some examples on like how let's see some examples on what all would mean that it is only gives an arithmetic accuracy and not the compliance of the not compliance of accounting policies. For example, one is purchase of fixed assets. Fixed asset is a capital expenditure, right? So ideally, it should be an asset account should be debited and credit should be either if the payment has been made to cash or to the particular creditor from whom the asset has been purchased. However, if the company enters a journal entry of expense account and charges it to P&L of when for a purchase of a fixed asset, if the accountant has charged it to an expense, then it is absurd, right? They did not follow the concept of revenue and capital expenditure distinction, and the accounting policy was not being followed. But this won't get reflected in the trial balance. The trial balance will show it will get tallied, but such not non-compliant accounting principles would be reflected in the trial balance. Another example is wrong amount. If the debit and the credit side of a journal entry is being wrongly being accounted, even in such cases, still there are some rectifications to be done. Transactions need to be recorded. If a particular financial transaction has been completely being ignored, still the trial balance will be, but still it is not accurate. The books of accounts is not. All these cases we will be discussing separately in the concept of rectification of errors. So that's a separate topic on rectification of errors, in which we will focus on what are all the errors, balancing errors, in which in some errors which get affected the balance not being tallied, and how to rectify such errors will be discussed in detail, and we will also so here I have briefed on how is a financial transaction being journalized, how it gets posted into a ledger, and how does it get reflected in the trial balance. Okay, while discussing about these stages of the accounting process, there is a need to discuss about this as well. These are subsidiary books. So while recording, we have already seen that journals have been posted and then they get booked into ledgers. So there is also a concept of maintaining subsidiary books, in which case these are maintaining subsidiary books instead of primary books. That is instead of maintaining separate journals for each and every transaction, if the organization is bigger, then it will be very much tough to compile all the journals and then post them to the ledger. So for ease of understanding, instead of the primary ledgers itself, these subsidiary books are being maintained. Subsidiary books, for example, are purchase books, sales books. purchase return, sales return, bills receivable, bills payable. So this means that a purchase book would include all transactions which are in nature of purchase. Sales would include all journals of transactions. So on and so forth. And when journal proper, all those transactions which were not covered in any of these subsidiary books would be kept covered in a journal proper. Say, for example, credit purchase of a fixed asset. It neither gets covered in any of these books, nor it gets covered in a cash book, because cash book is also all cash transactions will be covered in the cash book. So any miscellaneous transactions would get journalized in a journal proper. So when the organization is bigger, instead of maintaining separate journals for each and every transaction, for ease in preparing and maintaining books of accounts, subsidiary books are being maintained, and from here they are posted to the ledger and finally to the trial balance. I hope you had an overview of what are journals, ledgers, and the trial balance. I will meet you soon in another video detailing and solving a problem involving on how a transaction travels from journal and gets posted to a ledger and then finally to a trial balance.
Don't forget to reply back to my mail ID with your answers, and I'll get back to your queries. You can mail them to the email ID given in the description box. I hope this material would be useful. And finally, don't forget to like, comment, and subscribe to my channel. Thank you.